Hi, Sunilji. Good afternoon. Welcome to the show. How are you, sir?
Good afternoon. I'm doing fine. Thank you for having me on the show.
Thank you for your time, Sunilji. Sunilji, what's the outlook for the commodity side?
Commodity market has been in a very tight range during last couple of weeks, actually. A lot of data were, anticipated, and even today we have a couple of data. One is unemployment data, ECB press conference is also there, and then we have inflation data also today. I think most of the investors and most of the commodities are waiting for that data outcome to take a trend. In terms of precious metals, I think dollar index is improving a bit. It is trading above 90 mark now, and that is putting pressure on gold and silver prices at the moment. At COMEX, 1881 is the price, and in domestic market, we see gold trading 48,900 level now. It is down by 200 points today in the domestic market, but we are expecting a pullback in gold prices after we have the evening data out. I think trend front, I recommend a buy on this kind of scenario for both gold and silver. 48,800 can be a decent entry point. 48,500 can be a stop loss. And for the day, I think somebody can target 49,500. And for a week's time, I believe 50,000 can be a target for gold. Silver, it's trading at 71,400 now. 71,000 level can be a decent entry point for somebody who is willing to buy silver. Can put a stop loss of 70,500, and one can target 72,500 and then 73,000 in a couple of days' time. At COMEX also, we are expecting silver to cross $28 mark. Currently, it is trading at 27.64 level. So we believe that gold and silver prices may find some support, and we may see some appreciation happening in the precious metal segment from here on.
So what do you think about crude and natural gas?
Crude oil, I think yesterday we saw US inventory data. Inventories were lower than what we were anticipating. The forecast was that the inventories drawdown will be close to 2 million barrels, but the actual result was 5.2 million barrel shortage. So I think we saw some correction happening against the data actually. The prices were supposed to go up, but in fact we witnessed some profit booking happening yesterday. I think couple of news from one is US and Iran talks. That is something which is, possibly in a matter of 3 months we may see getting resolved, and over a period of time we can see some inventories coming in from Iran front. I think Iran crude oil will come in international market once US lifts its sanctions on Iran. So that is something which people were hoping, and some correction is what we saw yesterday. And even I think prices had gone up from $62 per barrel to close to $70 for WTI. Some $8 to $9 appreciation we had seen happening in a week's time. So we were we were anticipating a technical pullback anyhow, and even that is something which pulled back the prices a bit. But over a bit of time, I think overall economic outlook is positive. Since we are coming out of a pandemic, the demand recovery anticipation is good. I think over a period of time, weakening dollar and improvement in demand due to the pace at which the vaccination drive is happening is going to drive crude oil prices. And we believe in the domestic market, 5,090 per barrel is the rate in the domestic markets. 5,050 level can be a decent entry point for somebody who is willing to hold crude for a month or month and a half time with a target of 5,200, 5,250. One can maintain a stop loss of 5,000 or 4,980 level in the domestic market. Internationally, I believe WTI may trade close to $72, $72.5 mark from current levels of 69.5. If we talk about the natural gas front, I think natural gas prices have recovered a bit. In the domestic market, we are seeing the natural gas prices trading around 231 now. So appreciation of almost 30 rupees is what we have seen in the last couple of weeks' time. This is on account of a couple of fundamentals. One, there is a rise in temperature. Ideally, natural gas is used either to cool the housing environment if the temperature is beyond average, or it is also used for heating purposes if the temperature goes below the anticipated level. This time around, the temperature for forecast in US is higher than anticipated number, so consumption for natural gas has gone up a bit. Even I think a rise in global prices have boosted the US exports of crude oil, this natural gas to record high level. that is also supporting the prices. So over a period of time, I think 245 can be a target for natural gas from current level of 230. So one can buy around current levels, 230, can maintain a stop loss of 225 and can target 250 level. I think once it comes to 250, the investors need to be a bit cautious because then we may see some pullback happening in natural gas price.
Right. Sir, monsoons have come, looks like, on time. What's your assessment right now as far as agri commodities concerned?
I think monsoon expectations is good this time. And overall, the reports that we are getting from weather forecast agencies, we are anticipating, the monsoon to remain as per the expectation. So we are expecting a good monsoon this time. Plus, most of the commodity prices have gone up because of the supply concerns and because of lower inventories over a period of time. So I think most of the farmers are also focusing on growing the crops that give them or that yield them better prices. Especially, I think in the domestic market, we have seen people focusing more on soya crop because the prices have reached to a decent level. People, in fact, the farmers want to make the most of the current prices. And I think that will help, soybean production in India. We are having a forecast of, there is a prediction that soybean crop will be higher by 10% this year, considering the prices and considering the monsoon. And even I think production is likely to go up by 6%. So that is something which will possibly put brakes on the rising soybean prices. We may expect the prices to again come back, considering the increasing acreage of soya crop as such. On chana front, yes, government has allowed tuar, urad and moong import, and due to the tighter restrictions earlier, there was supply disruption. But now, since most of the mandis are back to operation, the prices are trading near to MSP at the moment. But over a period of time, I think pulses front chana. This year the crop is low and the consumption is better. And even COVID-19 second wave scheme from the government to distribute free ration is something which is supporting the prices. So over a period of time, we believe chana can be a decent entry level around 5150 level. Buy on dip strategy can work there. And one can maintain a stop loss of 5,100 and a target of 5,250, 5,300 can be seen coming in chana prices as such. All in all, I think even government's amendment on increasing the MSP is also going to support the farmers this time. I think that is something which will help farmers fetch a decent price for the crop that they are going to sow. So I think overall, most of the government policies are in a way willing to balance the farmer income at the same time. They don't want to hurt the consumers, rich consumers' pockets at the same time. So I think this year, most of the agri commodity prices will remain bullish, and the consumption is expected to go up. The vaccination campaigns are picking up pace, and over a period of time, we should see some more rally happening in most of the commodities on the agri front.
Right, sir. Any view, sir, on the metal side?
Base metals, couple of things have happened recently. One, dollar has recovered a bit. That is something which is putting pressure on base metal prices. And on the other hand, we have started witnessing rise in COVID cases in China. Again, as we all know, China is the largest consumer of all the industrial metals. So that is a concern area. Apart from that, the Chinese factory data is also suggesting that the cost of input or the cost of the raw material has reached 12-year high number. So that's something which is capping the prices because China is also counteracting on the rise in base metal prices, and they have also issued statements that they will work towards curbing the unwanted price rise in most of the industrial metals by reducing the physical demand. So that is something which we have seen happening, and because of which copper prices have corrected from almost 830 level to 737 level now. But the long-term fundamental or the medium-term fundamental for base metals will remain positive. We are expecting Chinese refined copper usage to increase this year. Overall demand will always outpace the supply, considering the demand from the manufacturing side. So even that is something which is going to support. With the loose monetary policy, we can expect dollar to remain soft. Even that is going to support the industrial metal prices. Apart from that, even I think US will work on fiscal stimulus this year. Already Biden government has, kind of proposed $6 trillion plus spending on fiscal stimulus front. That is also going to support the industrial metal front if we talk about the U.S. Contribution to the demand for the industrial metals. So over a period of time, even electric vehicle segment is also going to support the prices for copper, because copper is one of the major, raw material used for electric vehicle segment. That is also going to be a driver, and even apart from that, nickel from the battery manufacturing side, and lead again from the battery manufacturing side will also find support from the industrial or manufacturing side, especially the electric vehicle segment. So strategy front, if we talk about copper, looks to be a good buy from around 730 level. One can maintain a stop loss of 720. We may again see copper prices touching 780 level, and if it breaks that level in the domestic market, we may again see 800 level being touched in the domestic market. Zinc prices are already trading near to the multi-year high. It is trading at 236. We are also expecting some recovery in zinc prices, because Chinese refined zinc output is down by 2% last month. So that means even zinc prices will find support over a period of time. Even China zinc treatment charges have jumped to 5-month high, which is obviously going to support the prices. So we are bullish on copper and zinc. Zinc also can be a commodity that can be focused for buying around 235 level. Maintain a stop loss of 230, and one can target 250 in another 10-15 days time.
Right, sir. Thank you, sir. Thank you so much for your time.
Thank you very much for having me on the show.